welcome to FinextraTV. I'm Hannah Wallace and we're here at Cybos 2019 in London. Kindly joining me now in the studio is Tony McLaughlin, Managing Director of Emerging Payments at Citi. Hello Tony, it's lovely to see you again.
Hi, it's a pleasure to see you.
Thank you for joining us here. Now the first thing I want to talk to you about is transaction payments. These are becoming increasingly electronic, which might raise some concerns and challenges around validating and authentication. So to start off then, could you highlight some of these concerns?
Yeah, sure, it's a valid concern. As payments become electronic, really it's not a question anymore of a battle between cash and electronic, it's really a battle between electronic forms of payment, and security is going to be a big consideration. So one of the things that I think we can take from the recent experience of PSD2 implementation is that strong customer authentication, which is basically the way you secure these transactions, has become a key issue for people who want to use open banking, for people who want to use electronic payments. And quite simply what we think is we have to have frictionless payments through better digital ID. And essentially, and it's not something that I've made up, but there's a phrase that says payments equals digital identity plus accounting entries. If we fix the digital identity, we fix payments, and we can transact securely and effectively digitally on a frictionless way with a good digital ID.
Well, following on from that, there is a lot of talk about frictionless payments. That's what the industry wants, that's what the customer wants. But do you think we're sacrificing or threatening the standing of security? Is there a bit of a risk here between the two?
I think there are different ways of skinning the cat. You can have a national ID scheme where you're really trusting the government. That's what they have in India with the Aadhaar scheme. You can have every bank with their own ID scheme. The technology people within the individual banks doing their own work. Or you can have community solutions like the bank ID scheme in Sweden or Norway, or the It's Me solution in Belgium, which is a collaboration with telcos and banks. So there's a number of different ways of doing it, but I think the benefit from a security perspective of the common solutions is all the good guys are working together against the latest threats. Whereas if you have bank proprietary solutions, that's really where the friction comes in, and that's where maybe one of these solutions has a vulnerability. So again, I think all roads in terms of fixing digital payments leads towards digital ID, and there are some great examples like the bank ID schemes in Sweden or Norway where they've really solved digital payments in a secure way. We think that's the future.
And I'll come on to a bit more of that in a bit, but sort of looking at partnerships, what's their role and how does that help in this area?
So partnerships will be essential. There needs to be a willingness for consortia to come together and agree a standard. And in a sense, it's a little bit like many things in banking or many things in financial services. There's stuff that should be done at the level of the individual bank. There's stuff that can be done in the non-competitive space. And there's stuff that really probably has to be done by regulators to bring the communities together. Digital ID, I think, is one of these things where maybe there needs to be a little bit of a prompting from governments and regulators, but also a willingness for banks to come together with other parties perhaps to create industry solutions. So, going forward, I think maybe banks are very much focused on what they have to do to digitally transform. I think it would be healthy if there was a rebalancing to what we can do as a community, and
together.
What better place to do that than at Cybos.
Stronger together. And now I know you've been promoting at Citi this idea of a Federated Bank ID. I know you've also had a recent report out as well. Can you tell me a bit about this and sort of introduce it to our audience?
Yeah, sure.
And tell us whether it's really obtainable.
Yeah, so this report we released was called The Age of Consent. Mm-hmm. And the reason it was called The Age of Consent is because we drew a parallel between the European legislation GDPR. What is GDPR all about? It's about when you're interacting with a digital service, you have to give informed consent. And in open banking and PSD2, what is strong customer authentication? You have to give a secure consent. Strong customer authentication is a secure consent. So really the question is, how in this world of digital do you give consent? And I don't know about you, but I've got hundreds of passwords, hundreds of credentials, and I would like that thing to be rationalized. So we can look to places where this is solved. It's solved in India through a national scheme, and it's solved in Sweden through a Federated Bank ID. So Federated Bank ID is an abstraction of this layer, which is currently within, in many markets, individual banks. We've taken it out of individual banks in Sweden, put it into a kind of communal consortium, and it solved it not only for the banks, it solved it for the economy. And so there's a report by McKinsey that says if you have a good digital ID, you can increase GDP growth by between 3 and 13% depending on the country. So to us, let's use what works. We think we can look into markets like Norway and Sweden, take the best practices there and apply it to other countries.
Well, it certainly sounds like a really positive development going forward. But do you think it can be rolled out globally? Is that an option?
Well, I think it probably works best within a legal jurisdiction. In Europe, we have eIDAS. Not to get too technical about it, but interoperability between ID in Europe. So we've got a common legal framework in Europe. And also let's think about the policy agenda in Europe. The European Central Bank wants there to be a single market for payments in Europe. There's been talk of a third scheme for a long time, a European scheme for a long time. So what we would suggest is a pan-European federated bank ID modelled on a Swedish model or a Norwegian model or a Belgian model. That would be the base layer of a single market for money in Europe. Look at the US. Again, it's a market where I think the statistic is you've got 25% of card volumes, global card volumes, and 50% of global card fraud. You try to pay in the US, sometimes they don't ask you for the signature, sometimes they don't ask you for a chip and PIN. So digital ID done well, not individual proprietary solutions by banks, but digital ID done well, it solves payments. It solves the societal problem of payments at the base layer, but not only that, it encourages the growth of the digital economy.
And what sort of conversations here at Sibos have you been hearing around this topic? And is there anything that hasn't been discussed that should have been?
Well, I think one of the things that we're trying to do is draw a connection between the payments world and the ID world. And I don't want to kind of throw shade at some of my ID colleagues, but a lot of these people are kind of like crypto heads and really IT security geeks who don't maybe speak the language of the broader payments community and the business community. So what I think is really important to do is to see ID in its place in terms of the revitalization of what we've called the fiat currency stack. Our commercial bank money, central bank money, and e-money rests on a set of systems, and all of that has to be brought into the 21st century. The base of it is digital ID. So we want the IT geeks to have their day in context, and what we've been trying to do at Sibos is to connect the dots between these very potentially dry topics like digital ID and actually the revitalization of the payment systems.
Wonderful. Tony, as always, it's been such a pleasure speaking with you. I'll let you get back to the last day of Sibos.
Yeah, thank you so much, Hannah.
Thanks so much.